Are we boring?
Yes, we are, but that's not a bad thing. There is an investment firm whose motto is be boring, make money.
Nice,
Right? Because
yeah.
at the end of the day, you don't want a lot of drama putting your money in there. You just want it to give you steady returns.
Correct. So you know how you hear so much about Singapore being Asia's powerhouse, right? Of late, however, the SGX has lost some of its luster. To date, it has secured just one initial public offering, that's IPO to you and me, and that's at the first half of 2024. Now, this makes Singapore the worst performing market in Southeast Asia for public listings. So today on Money Talks, we want to know, how did we get here? Is there a chance, an opportunity for things to get better? And what does it mean for investors? Well, today I'm going to ask young Eu Jin. He is partner at RHTLaw Asia. Welcome, Eu Jin.
Thank you very much, Andrea. Good to be here.
How does the performance in a country's stock exchange affect its economy? What's the correlation here?
It probably is not equally important to all countries.
Okay.
So it really depends also on what your country is good at, well known for, and what resources does it have.
Okay.
But certainly in a country like Singapore, where we do not have very much natural resources, right? We have human capital and we are a financial hub. Not just in Southeast Asia, not just in Asia, but I think we are viewed as one of the global financial hubs.
That's right.
So in this financial hub, and we have so many sectors that are doing very well, you cannot not have a stock exchange that is functioning properly or doing well. So I think it is very important. You want to encourage entrepreneurship. These entrepreneurs are always optimists. They are dreamers. They are world builders. And at some point, they might also say, look, I want my company to be a public listed company. It gives me a certain profile amongst, my peers. I become an industry leader instantly, right? It gives me a profile amongst my customers, amongst my vendors, and makes me, the founder, look somewhat good as well, right?
And you make your country look good as well.
Exactly.
You're a representative of that country.
That's right. Suddenly you're in the public limelight.
Right.
And some of these bosses would like to be in the public limelight,
Yeah.
So in that sense, it gives them something to aspire to.
Right.
Rather than just, grow their company and then what? And of course, there's the capital raising part as well, right? Because they might want an infusion of money to grow their business further, to expand overseas, to diversify. An IPO will give them that capital infusion that could just take their business to the next level.
Okay.
Then from the perspective of investors, right? We actually do attract a lot of investors. We've attracted a lot of money into Singapore. But how many of these investors are putting their money into our homegrown companies? One of the reasons why they're not doing that is because they don't see an exit. There are a lot of these investors, like private equity funds, venture capital, is to actually sell their stake. But if they want to ride the growth of the company, there comes a point where the company is not growing anymore. They're not getting their returns.
Right.
So an IPO actually allows them to, for example, partially exit their stake, recycle some of that capital, invest in something else. And many of these funds and investors actually have a mandate to recycle their capital after a while. They cannot stay invested for 20 years.
Right.
So without a thriving and vibrant stock exchange, a very major avenue for this recycling of capital is not there.
Right. And do you think that's the reason why the Singapore Stock Exchange is where it's at right now, that limitation?
I guess it's a bit of a chicken and egg problem, and maybe we can go a little bit into how we got here in the first place.
Sure.
But the fact that there is no exit, right? There's not enough liquidity, and there's no assurance that the company's share price will perform at a certain level. Of course, there's never an absolute assurance, but still, if every time there's a listing, the share price goes down, that's not going to, inspire a lot of confidence in a lot of these investors.
Is that the reason why the number of IPOs is so important to a stock exchange and therefore a country's economic prospects, business prospects, because it's representative of how much investment and investment attraction and appeal that country has?
It is one of the indicators as to how much our local companies or companies wanting to list here is attracting these investments. And if there is, again, no such avenue, then these investors will have to put their money elsewhere.
Right.
So, putting their money into a company that's going for a listing is no longer a viable route for these investment firms and all that. So I think to get the stock exchange back to a level where it is an integral part of this entire ecosystem of business is very important.
Right. Where do SPACs sit in all of that? Because I remember in the pandemic, there was a lot of talk about how certain companies were using SPACs. These are special acquisition companies to list their brand on the stock exchange.
Our exchange came up with this idea of introducing SPACs to the SGX. Of course, SPACs as a concept is not new. They've had this for a while in the US. In the early 2000s, it was popular, actually. And in fact, about 15 years ago, I think the stock exchange tried to sort of put out a consultation paper on whether we want to introduce it here. And the consensus then amongst the investment community was no, because it's a blank check, right? You know, you're putting money into a company with no track record, no business. But I guess 10, 15 years later, the sentiment changed. And seeing how SPACs were doing very well at that time, just a few years ago in the US, the SGX promulgated the SPACs rules. Unfortunately, the reality of the market sort of hit. So there were 3 SPACs that successfully listed.
Yep.
But one of the requirements of the listing rules for SPACs is that after 2 years, and maybe after an extension of 3 years at most, you must acquire a business. You cannot just stay as a shell company just holding on to cash. So unfortunately, out of the 3 SPACs, only one was able to what we call de-SPAC, which is acquire a business, which was a Taiwanese internet marketing business. The other 2, unfortunately, did not succeed, and for a variety of reasons. It's harder than it looks. And then what has happened since then, even in the US, is that SPACs have actually gone out of flavor. Because many of them did not do well. And I think people have sort of moved on, a bit like moving on from meme stocks. They've moved on from SPACs as well.
Right.
So the de-SPACs are not happening as much as they used to. And therefore, I think in Singapore as well, especially after seeing the performance of these 3 SPACs, and then they'll go back to the traditional IPOs or reverse takeovers, which are sort of, that's been around for a while. Yeah.
Okay, so I talked about where the Singapore exchange is today and that it's not in a good place. You were alluding to some of this a little earlier as well. Now, the thing is, we have a reputation for being safe, stable. Our market is tightly regulated. It's very attractive by and large, and it's a great city to do business. So why weren't we able to attract the IPOs that we were hoping for? I mean, even Singapore companies like Caro, I believe, decided to list somewhere else in New York or in London. They still have that appeal and we don't. What happened there?
How we got here, probably have to start way back, maybe during the global financial crisis. I think a lot of retail investors, got burnt. Just lost a lot of money. Some of it in structured products, but they just lost a lot of money. So therefore, they said, okay, I'm just going to back away and just keep my money in the bank, for example. And we are naturally conservative, right, as Singaporeans.
That's right.
Then, of course, a variety of other things happened. There were the S-chip scandals for the Chinese stocks. Most of them, mind you, were actually good. They were fine. But there were a few just egregiously scandalous stocks, and downright fraudulent. And that hit the headlines. So people got scared of Chinese companies. And then, of course, after that, there was the penny stock scandal. I think some of you would have read about it or heard about it.
That one, yes.
And hopefully, not affected by it because, some penny stocks were driven up. The market was manipulated. People got in and billions were wiped off, from the market capitalization of these companies. And then a variety of other things such as the crash in the oil prices. So a lot of the oil and gas companies, shipping companies, maritime companies and their support services, some of them actually went belly up, and others just, didn't do so well after that. So a whole variety of factors have sort of driven people away. Everyone is scared. Somebody probably got burned somewhere, or you know someone who got burned somewhere.
Yeah.
And so you say, okay, let's just withdraw from the stock market.
So the Singapore Stock Exchange effectively has become a victim of the Singaporean investor behavior.
I think some of the requirements for listing are quite stringent. They're quite high. So many companies are actually not able to meet those requirements.
You talked about how we tend to be very financially leaning. The financial institutions are highly favored among Singaporean investors when it comes to what's listed on the SGX. Now, some analysts allege that it's the lack of diversity in the SGX that makes it safer than other markets. Seems like a bit of a contradiction here. I mean, if it's safe and it's stable, how does the lack of diversity actually hinder us more than help us?
We have about 600 over listed companies. Of course, they come from a variety of sectors, but many of them are very small. So the big boys, it's overrepresented in terms of the financial sector. We are a safe market. And we are a stable market. I mean, you compare us to virtually any other market out there, we are a lot more stable.
But are we boring?
Yes, we are, but that's not a bad thing.
It's not, yeah.
Yes, there is an investment firm whose motto is be boring, make money.
Nice,
right? Because
yeah.
at the end of the day, you don't want a lot of drama, do you, right?
Yeah.
When you're putting your money in there, you just want it to give you steady returns.
Correct.
So in that sense, I think being safe is not a bad thing. Being not diverse, I think it's to one aspect neutral because it doesn't matter, right? If these certain stocks are doing well, you can put your money there. But at the same time, I think there are different investors out there with different interests. And they themselves may have certain expertise. One of the mottos you should always have is invest in a sector that you are familiar with.
Okay.
Right? So the thing is that if there's not much to choose from, or those that are on the list, which are listed, are not doing well, even though you're from that sector and you know the sector well, in fact, in a situation like that, you look at the stocks and then you say, no, these are not worth investing in, so you don't. So I think greater diversity will also allow a greater diversity of investors to come in and invest in the stock market. So it would be a good thing.
We talked about the appeal of Singapore to conduct business, right, at length. At the same time, we also talked about how Singaporeans tend to be very risk averse, very conservative when it comes to investing. Is there a pattern to be made here?
Yes, we are conservative, and we tend to not want to take risks. But that in itself doesn't necessarily mean that our stock market cannot thrive. There are other factors that can certainly give a boost, to improve, for one thing, valuations of existing companies and new companies coming in on market, right? The sort of PE ratios, price to earning ratios that are given to new stocks is very poor, compared to other markets. So a lot of companies don't really want to sell their company cheap.
Yes.
Because when you're selling stocks, you're actually selling parts of your company, and you're selling it cheap if your valuations are low.
Yes. So you want to maintain that,
correct,
I guess, prestige in value.
Yeah, and also to get more money for the amount of shares that you're putting out there to the public.
Yes.
Right.
That's right.
But that said, is this a bad time to go into the market? No, because valuations are low. You should get in now.
Yes.
Well, you're buying it cheap and you hope that things improve after that. Whereas what's happening, even in the US and some of the other markets, is you're actually buying at the peak. So people are pouring in money, for example, into the NYSE, into NASDAQ and all of that. But, people think, of course, now that the Fed has cut rates, probably things will still go up for a while. But I am sure it is probably closer to the peak than it is to the trough.
Right.
Of course, this being the US, you never bet against it, right? But in Singapore, to some extent, certainly it's my view, and maybe shared by some others, that probably it's not going to get much worse, right?
Okay.
So you're buying really at quite a good valuation, and you're buying into a stable market, and usually the stocks are safe, stable, well-governed, right? So the time is now. So the only thing you hope for is how long is it going to take for it to upturn,
yes,
and then you get your returns.
That was the question I was about to ask you. because it seems like, okay, we're hanging on, we're waiting for growth to happen to some of these companies. And that's why we buy into these stocks, right? But how do you know as an investor that after a while, okay, I don't think this is going to grow more than it is? I mean, how do you know that's the right timing to maybe not get out, but maybe shift your strategy a little bit?
There are two things you must always look at when you talk about investing. One of it is the overall market, right? So, how is the STI, how's the whole market doing in Singapore, even worldwide? So that's a macro view.
Yes.
But when you're buying stocks, you should really look at the company itself, right?
What about sector?
Yeah, the sector, absolutely.
Okay.
Absolutely. So certain sectors is cyclical, certain sectors are on the up, certain sectors are on the down cycle. But even within the sector, there are good companies and bad companies. If you're going to invest in a company, study the company. Study its historical performance, study its financials, study its prospects. And especially now that COVID is over, do attend all these shareholder meetings. If the company calls for an AGM, annual general meeting, which it has to once a year, or even an extraordinary general meeting because it wants to take some corporate action, take the time to be there, as a shareholder, and then take the time to meet the management, talk to them, right? You'll find that the management is most accessible during these general meetings. Go right up to the management and talk to them, right? And get their views, get a sensing of what they are thinking. What's their general attitude and posture, right? Are they, really having a growth mindset? Or are they just very conservative? They themselves are just coasting along.
Correct.
Maybe drawing a hefty salary and director's fees, but not really having a vision for the company.
Right.
So you might then think, okay, well, is this a company where I want to put my money for the long term? Maybe not. So I think that is one of the things that as investors, you need to do your homework as well.
It's timeless advice, but I think now more than ever is the time to do it as there are opportunities abound.
Yes.
As you said, while the valuations are still cheap relatively, this is the time to buy your time, to do your homework and really make that choice, a very well-informed choice.
That's right.
As the stock to buy in Singapore. Yeah. So obviously, this is the crux of the conversation here, Eu Jin. To correct this, the MAS has assigned a task force, right? And this task force is meant to come up with ideas to strengthen the SGX, make it appealing again. I want to ask you what your recommendations would be to bring the SGX back to its either former glory or a semblance of it, or maybe even do better in the coming years.
Certainly, none of us can sort of preempt what the task force is going to do. And certainly, they will have resources and levers that they can pull, that the rest of us do not have access to. But it's a good start. I'm glad that there is this task force and that they seem to be intent on fixing the problem. And they will definitely have the resources to do it, should they choose the right solutions in that sense. In terms of what can be done really, the same old isn't working. There's been little tweaks here and there, but it's just not moving the needle.
Okay.
So maybe it's time for some more radical ideas.
Okay.
But the thing is, these radical ideas are not ideas that, you and I think about. They are done in other markets.
Correct.
Right? You just don't need to look further than our northern neighbor, right? Bursa Malaysia is doing extraordinarily well.
Exactly.
This year,
Yes.
They've had, 20, 30 over listings to finish the year, maybe even with 40.
Yeah.
And they've had a good run in terms of investor interest coming into these companies, right? But one thing that's always been very consistent is that there is support for the stock market from their sovereign pension funds.
Right.
Right. And, in fact, like the EPF, right? I'm not sure if there's a written mandate or it's an unwritten mandate, but they support all their IPOs.
Right.
They put in a certain sum of money,
Because it shows government faith.
Exactly.
Right.
They are investing, it's pensioners' money, right?
Correct.
So if you talk about, we don't want to risk, the retirees' money, they're doing it. They're doing it. And so you say, what has their performance been like when they do that? Well, last I checked, do you know that on Bursa, right, they're giving the EPF a return of a yield of about 50 billion ringgit a year.
That is sizable.
Exactly. That's right. That means in dividends, so In distributions, they're getting 50. So that's 50 billion into the coffers of the pension fund.
Right.
It does work. It can work, but in Singapore, we don't have that level of support. Some of these questions have been posed,
Sure.
even in Parliament. And of course, our ministers have said, it is not the mandate of our sovereign funds to be supporting, our local stock market, which is entirely true. I mean, there's a lot at stake. You can't bet the farm on this. However, I think it probably is possible to set aside a certain amount of money in order to do this, right?
Yeah.
I mean, so again, you're not inventing the wheel. You're just looking at what other countries like Malaysia, like Canada, like Australia, like the US, what they do. So there is institutional support. I won't say it's government support, but it's institutional support to support all these companies. And given that we have very good names in Singapore in terms of our various, our sovereign wealth funds have funds underneath them, very well-known funds, extremely reputable funds.
Exactly, yes.
And if some of these were to have a mandate of supporting our local companies, other institutional investors will pour in, right?
Correct.
They take the lead from a very well-known, sub-fund of a sovereign wealth fund.
Yeah.
And they'll come in as well and pull everyone in with it. And even retail investors will see that if these names can do it, I think it's a safe bet.
It's a kind of indirect rallying of the people in a way.
Yes, indeed, exactly. And that might in fact drive that interest from the retail market that's been missing for a very long time. This is something that might revive the interest of the man in the street into investing into our local companies again, which, as we have said, compared to companies anywhere in the world, one of the safest places to put your money. But that's half the story. The other half of the story, the regulators must do their part as well, right? In my view, the current threshold that's been set for listing on the main board is a bit too high.
Okay.
It's currently set at $30 million profit before tax, in the year before you're seeking your listing. And particularly talk about domestic companies or even regional companies, how many companies can meet the threshold? So perhaps one thing they can do is dial back on the threshold for a main board listing. Then that might be able to attract more companies to come in. The other thing I feel is maybe a slightly less conservative approach to business models. Because the thing is that as a regulator, I know it's a difficult job.
Yeah.
They want to make sure the company has a certain track record and all that it's in a business that is very viable, it's minimal risk. But the thing is that, as you mentioned, we are turning ourselves into an AI hub. We have been a fintech hub, and that's been very successful.
Correct.
So there's a lot of these new economy businesses that are, and the other big one, of course, is like ESG, right? That's another sort of new economy business. And a lot of businesses have formed around these, technology, ESG and all that. And some of them, may not have the kind of track record and bulletproof sort of a pipeline or business model that in a perfect world ought to have. But that's exactly because these are new businesses in a new economy. I think everyone is just figuring their way around.
Yeah.
But give these companies a chance. Fundamentally, I think governance must be there.
Of course, yes.
So that there's poor governance or downright fraud, and that's, of course, a no-no. Be a bit more forgiving. And maybe some of these other companies can then come in.
Yeah.
And then, you give a boost to these sectors, you give a boost to these companies, and people who have the risk appetite or who are themselves players in this ecosystem can actually say, I want to invest in that company.
Certainly in Singapore, the kind of retail investors that are the Tesla investors of Singapore, the meme stock ones even the crypto investors even. I mean, fortune favors the brave to some degree, right?
So investors like this are putting their money, in NASDAQ in the US. Why not put some of it here if there was such an opportunity? So you got to let these companies come here so that then maybe some of the money can stay here and people invest in the companies here. I think both sides have a part to play to try and, improve diversity as well as liquidity and valuations on our market. Before the people really feel that there is, that it's a lost cause, and they just give up and put their money elsewhere, I think we do have a certain window, but not forever, to get this done right.
Yes.
So,
we have to seize the moment. We have to strike while the iron is hot. And I think it'll be really exciting to see what the committee comes up with. Eu Jin, I've learned so much about how the SGX works. I feel a little bit more invested, if you will. Even if I don't have a Singapore stock in my portfolio, I feel more invested in wanting to make this work. Eu Jin, if you could have a meal with any public figure, dead or alive, who would it be and why?
I'll probably want to sit and have a meal with our current president, President Tharman Shanmugaratnam, because I've been an admirer of his. I think he has done a lot for the country over the years, and in every portfolio that he takes on and every position that he holds in Singapore or internationally, I think he has applied a very formidable intellect to solving a lot of the problems and dealing with all the issues there. So I think he's a person I would certainly would like to spend an hour or two with if I had the opportunity.
Yeah. Eu Jin, that was wonderful. Thank you so much for being here today.
Thank you so much. Thank you for having me.
Now, listener and viewer, we hope you enjoyed this conversation, and certainly, like me, I hope you have taken away something really useful and inspiring about the Singapore Exchange in this podcast episode. Now, if you have any thoughts or comments, any feedback, any questions you might have, feel free to drop us a message. This podcast is available on Apple Podcasts as well as Spotify and YouTube Music. Now, don't forget to rate us if you're enjoying this podcast, okay? A big thanks to the team, as always, Crispina Robert, Tiffany Ang, Junaini Johari, and Joanne Chan, as well as Saya Wind, our cameraman, Jeremy, also in this podcast crew for today. I'm Andrea Heng. Thank you so much for listening to Money Talks.